Well, hello there, everyone. Welcome to another episode of This Week in Crypto. I'm your host, Brian. Maxim will not be joining. He is traveling along with much of the Santiment team, but I will be covering a lot of what's been going on in the markets in what has been a nice rebound week here. We have seen a lot of doom and gloom in the early part of July, and I think that has had a translation into why we've been rebounding the way we have, especially this past weekend. Right around a week ago, actually, we were really starting to see a lot of fear. Prices were really plummeting. We got to about 54K Bitcoin. Many were calling for 50K or even 40K coming up next. And of course, at least for now, that has not been the case whatsoever. We ended up rebounding fairly substantially, especially among altcoins. Notably, Optimism has had a huge week, up 27%. Notcoin up 47%. Shiba Inu up 16%. Cardano 17%. Stacks right here up 20%. So there's a lot of big stories that have been developing, while the main consensus is that prices are going to go lower. And interestingly, we put up a poll just yesterday. I won't share it on the screen, but it essentially said that the consensus is that prices are going lower according to the crowd, and they're hoping for that. So what the crowd is essentially admitting is we sold off a bunch of our crypto, and we're waiting for it to go below 50K at least before we start to buy in again. Now, when this happens, historically, when the crowd is saying, oh, I'm still very bullish on crypto, but I want to buy in at a lower price, oftentimes, more often than not, that price never gets there. And people are left holding a lot of dry powder in the meantime. Excuse me. Now, I think in this case, there has been a definite overreaction. Certainly, there's been some benefit to the crypto markets after yesterday's CPI report, the Consumer Price Index, which indicated that inflation was a little bit lower than what people expected. And with that, stocks really took off. Crypto actually did a reversal. I'll show you this really quick. It was kind of a perfect storm of buying the rumor and selling the news. So mentions of CPI and inflation surge, of course, right when the report occurred yesterday, about 24 hours ago, give or take. And right when we see this big spike in CPI here in blue and inflation here in red, all of a sudden we see a market top. And this is very, very common, especially among CPI and inflation or FOMC reports. Generally, whatever direction the price is going, it doesn't even matter what the report says. You see a reversal right after, especially if that report is kind of with the consensus of what the crowd already expected. So in this case, we were already seeing a lot of speculation that inflation would be lower. It would be a pretty positive report, and it was. So the theory is that prices were already climbing, and this is Bitcoin, but obviously this represents all of crypto. Prices were climbing as people were anticipating a positive CPI report. This could have been whales and sharks doing a lot of this pumping. And then as that confirmation came in, the CPI report yesterday, all of a sudden we see this reversal and everyone's going, what the heck? I thought that a good CPI report means it's time to buy, but here we are watching prices go lower and lower. Now, since that time, we've started to see prices bounce back again, and this is normal too. But the initial reaction, when it's aligned with the crowd's expectation already, oftentimes completely goes the opposite direction of what logic dictates. And that's because those whales and sharks who bought in early are now watching all those small wallets try to buy in as a result of the news. It's a classic explanation of buy the rumor, sell the news, right? Where you've got all these people who are waiting for the result to come in and then they buy, but the smart money already knew what the result would be, or they had correctly predicted it by chance, who knows? And those are the ones who kind of drove up the price in the price early, and the price was therefore kind of baked in. So I think that's kind of what happened. Now, this is a pretty small scale correction. It went from maybe 59K down to 57K, and now it's bouncing back to in the 58K-ish range at the moment. But you've seen this on much wider scales. Think of like the Ethereum merge that happened almost 2 years ago now, where the Ethereum merge went on without a hitch. But instead of prices surging, we saw 2 to 3 weeks of serious retracement that left people going, oh, I thought the merge was a good thing. What happened here? Right. So now we're in a situation similar to that on a smaller scale. It might have already kind of played out with all of the volatility, but I'm expecting there to potentially be some catch up going on with the stock market. If we take a look at this, we notice right away that the S&P has been soaring right along. Gold has been chopping back and forth. And then here's Bitcoin that kind of was going the opposite direction, especially since right about a month ago. June 12th and 13th is right when they started to diverge and go opposite directions. You've got the S&P going like this. You got Bitcoin going like this. And then gold here is in the middle. But since that time, we've seen the S&P up about 2.9%, while Bitcoin is down 13.6%. That is about as big of a divergence as I've really seen. There have not been a lot of these instances. The most extreme one that came to mind in the most recent past was the FTX collapse a couple of years ago, where the S&P actually was essentially not impacted, while crypto just took a nosedive and people started questioning the future of crypto altogether. So the reason why this is good to me is not only because it clearly shows that Bitcoin has some catching up to do if the correlation with the S&P is still there, but it also shows that overall, you've got Bitcoin not dependent on equities whatsoever right now. It's kind of going in its own path. And based on history, every single bull run that we've seen in crypto has happened without the reliance of the S&P 500. We see zero correlation between the two. And usually when that happens, it sparks bull runs. I'm not going to say that, 1 month of opposite price performances is a foregone conclusion that we're now going to see a bull run, but you get the idea. This is a pretty volatile market right now. And despite all of this choppiness, the S&P 500 equities are just surging along to new all-time highs, what seems to be like every single day. In fact, I think today it hit another all-time high. So I think eventually there can be some catch-up with crypto going into equities, and a lot of that, of course, is going to depend on whether whales and sharks would like to start redistributing some of their profit that they're seeing in equities into crypto, like we've seen in the past, especially in 2021. Now, obviously, the first thing we want to look at is whales and sharks. What are they actually doing right now with their crypto? Well, 10 plus BTC wallets, that's pretty much anyone with over $580,000 worth of Bitcoin in one wallet, their collective holdings have climbed substantially in the past 3 months. This has been an ongoing pattern that we've seen throughout the middle part of the year, especially. Over the past 3 months, they've accumulated 38,276 more Bitcoin. That's substantial, obviously. We saw a very, very mild downturn here, but overall, this looks like a bullish divergence to me when the bright green line representing 10 plus VTC wallets is going like this and price going like that, right? Normally, there's a pretty good reliance on what these sharks and whales are doing. It's by far the best combination of tiers I've seen that matches up with price over time. So I, again, think that the crowd is overreacting to the retrace. They've all decided it's kind of a, not all, but many have decided it's kind of a foregone conclusion that, oh, we never should have gotten this high. Now it's time to go through a retrace period. I'm going to hibernate for a little while and come back to this maybe in September or October when a bottom is forming, right? And obviously, crypto is never that straightforward. And it's designed to catch traders off guard. Prices go the opposite direction of the crowd's expectation. So right now, the crowd expects prices to go lower, but they're still bullish. Sounds kind of contradictory, in my opinion. And it's a classic case where people are left kind of sitting there with all of their fiat ready to buy, and they never get the chance until prices start to look like this again. And then they're like, oh my goodness, I got to buy. And then all of a sudden we see a correction. It's happened time after time after time to so many traders, people in the Santiment community, friends of mine who have, big bags that they trade. It's pretty much like clockwork at this point. And I'm not going to say that they're going to be wrong every time, but most of our team is seeing the same narratives as our poll showed on X and our Discord server, which is a bunch of people saying, yes, I think Bitcoin's going to go below 50K. And I'm hoping it does that so I can buy more. So keep that in mind, right? We'd much rather have everybody saying, oh, 50K, it's never going to go below that. I think we've seen the last of it, and we're going to go straight to 100K. That's a sign that we're actually going to drop. So the crowd's willpower right now is definitely giving arrow pointers toward a bullish, at least next couple of weeks, assuming this whale line continues going in the direction that it does, and the crowd doesn't waver. I haven't really seen any change from people's perspective, even after the CPI report. I think it was kind of an unsurprising one, with the economy starting to get a little bit better here in the US and much of the world as we continue to distance ourselves from the at least extreme, scariest version of COVID that was happening a couple of years ago. So just keep that in mind, guys. I think it's a really interesting crowd reaction that we're seeing at the moment. And if we look at weighted sentiment, by the way, I can get down to it. It's still showing just a ton of negativity here. So here is where we were last week, where we were kind of saying that we were nearing a bottom, and sure enough, we did see a mild bounce so far. And it's still negative now, at least in the last 24 hours since this new week bar started. The ratio of negative versus positive comments is still showing extreme negativity. A lot of people who were negative here are patting themselves on the back, going, so glad I sold at 68 to 70K. I'm so happy about it. And they've remained negative even when prices move down. So everyone kind of thinks they're a genius here. This happens all the time. But with enough of a stretch of bearish sentiment, you eventually get a turnaround where all these people are going, oh man, I sold at 70K, but I didn't want to buy back until 30 or 40K, but it never got there. Now I have to buy back at 70K again. So there's a lot of that I see all the time, and people ask me and our team about what they could have done differently. And I always just suggest being a little more nuanced and having a little more moderation with your trading. Don't, sell everything here and plan to buy everything here when here never ends up coming. 5 to 10% scraping off and then 5 to 10% adding back on when you feel you've done well enough and you've generated a profit. Sometimes that's all it can take. And people, a lot of the people who have made a lot of money in crypto actually through some of that trading rather than hodling. It's by not trying to be too perfect, right? Not saying, oh, my target is 51K because I did a TA analysis the other day on TradingView and drew a bunch of lines, and that's what my conclusion came to. But here I am at 53K, so I have to sit and wait. Well, it turns out that the TA was wrong by just that much. It never went down that low, and now they're having to buy back in at the same price they sold at. So that's my rant on that. I think that people make a lot of too definitive conclusions in crypto rather than viewing crypto as kind of a probability problem that they can be a little more nuanced with and imperfect with in order to kind of cover all bases. Oftentimes you want your portfolio to reflect that the price is exactly where you would be comfortable with it being, even if it went up 5% or down 5% or up 10% or down 10% the next day. You've got a plan, and you're okay either way, if that makes sense. So you want to be able to be cool if it drops because you've got a little bit of dry powder to buy back in, and you want to be happy if it keeps going up because you're obviously investing in the asset and your portfolio is getting bigger. But if you're extremely upset if it goes one direction in the next 24 hours from now, then you might not be setting your portfolio quite right. So that's, without telling you what to do with your portfolio right now, it's kind of just a learning lesson that I think a lot of experienced traders end up keeping close to the vest as they continue to improve their trading themselves. Okay, so with that more macro talk in mind, a couple other things I want to mention on the screener page. Social volume actually down significantly, which is interesting. And I think more than anything, the reason is that last week was such a panic-filled ride of FUD and scariness that a lot of people started to talk about crypto markets again after being absent for a while. Well, it's still pretty volatile right now. Bitcoin has obviously not done as much as it was doing last week when it was really pouring down. But I think that people are a little more comfortable now and getting back into just sitting and waiting, as opposed to having polarizing opinions when prices were plummeting. So social volumes down across the board. There's obviously a few exceptions. Toncoin still being talked about a lot, even though it was one of the biggest underperformers in the past week. EtherFi staked, a lot of these more one-off assets, Bitcoin, BEP2, Atom, Stack, stuff like that. They're getting a little more than the week before because a lot of altcoins obviously have taken off once again. But overall, Bitcoin and Ethereum down in social volume. Overall, the trading volume is down huge, down about 51% compared to the week prior, which I find really fascinating. I think that people were just doing a lot of dip buying or panic selling last week when prices were super volatile. So it makes sense for volume to cool down with at least Bitcoin flattening out relative to the week before. A few other insights I wanted to mention. By the way, we had some videos that I recorded with some collaborators over the past few days. So I encourage you to check out my talk with 3X Capital, as well as Thinking Crypto here. We put out an update about the top gaming projects in crypto, with Multiverse X, Decentraland, and Immutable X still making up the top three. but I would mention that Decentraland is getting a lot closer to Multiverse X than it's ever been. Multiverse X used to be like double the nearest coin there, so that's interesting. This one I want to mention. So Bitcoin wallets, overall, just the amount of them, they've really rebounded pretty heavily. It may have been more of a flat line, but the amount of 10 plus Bitcoin wallets really started to drop off right when that all-time high hit. I'm sorry, not all-time. This was after the rebound that almost hit an all-time high hit here in mid-May. And then you see all these drop-offs in 10 plus BTC wallets, and it's kind of chopping here. And they start to rise as we see this serious dip, which is normal because it's easier to own 10 BTC when Bitcoin prices are cheaper and sharks and whales are accumulating back as the price went lower after they presumably dropped off here. But now we're back to about almost a 2-month high, 261 more Bitcoin wallets with 10 plus coins compared to a month ago. That's a pretty good sign in addition to just the total amount of collective Bitcoin that they're holding. So keep that in mind as another bullish argument. ETF volume has picked up a little bit as well. I would keep that in mind. Makes sense with the volatility, as I mentioned. Yeah, and then I just mentioned a few assets that are seeing high network growth. We'll visit and take a look at what's happened in the past 24 hours near the end of the call as we take a look at small coins. As for Bitcoin and looking at some of its main on-chain metrics. So we've got volume that's kind of been up or down. You can see July 4th was when we were really bottoming out. And that's when a lot of people were either dip buying or panic selling. As for transaction volume, nothing too notable going on here. Daily active addresses, we have picked up a little bit, as you can tell by this trend line. So not including the current day, the average over the past 30 days is back up to about 696,000 BTC wallets interacting on the network on a daily basis. That's the highest we've seen in about 2 months there. So I like the look of that with the network picking up. Circulation is rising just slightly. We're back at roughly 88,000 unique tokens moving per day. So both of these key utility metrics are pointing back in the right direction. And I like to see that after we were seeing so much decline in the network's utility for a good amount of the year, especially right after the all-time high. It just fell off. All right, MVRV, obviously a very important one. Very, very even. We actually saw the long-term MVRV go below 0%, not once, but twice, very briefly. And as soon as it did both times, what do you know? We see a quick bounce. And then right here, we see another quick bounce. So what does this tell us overall right now? Well, long-term, average returns are only at about plus 5.5%, taking into account any wallet that's been active over the past 365 days. On the shorter term, 30 days, they're actually down 3.7%. Compared to last week when we made the same update, it's at about the same place where the long term is up just slightly and the shorter term is down just slightly. And this essentially is back to neutral, back to square one, after we were seeing so much time with the long term being well into the positive range. When we were at that near all-time high a couple months ago, we saw the 365-day MVRV at plus 41%, right? So that's not when you want to be in crypto. You want to be in crypto when everyone else is in pain, kind of like here on May 1st when we saw that previous huge dip with the 30-day down over 10%, over negative, or under, I should say, negative 10%. So look for signs like that. And if the 365-day MVRV really starts to drop again and 30-day stays low, you're starting to look at a historically good buying time, according to the math. Right now, it's about as dead neutral as you're going to see. Funding rate wise, nothing special going on BitMEX. It's staying pretty neutral. Binance, you are seeing a few signs here of not quite in short range, but getting there. If I highlight, or I'll hide everything else really quick. So you see how it's in dark green again? That means that there are some shorts that are pulling the funding rate down away from that normal neutral resting state. The lower it gets, especially if it starts to get into shorting range, that's where you see a lot of bounces and the shorts get liquidated. Price gets essentially rocket fuel injected into it and moves up more aggressively. So look for that. Right now, though, the crowd is more or less just slightly under neutral. Whale transactions, really not much budging going on. They're doing their usual rate of movement for now. We already looked at tiers. Here's a live look, by the way, at the 10 plus amount of wallets out there, just to see if there's any difference from a couple days ago. Probably want to make it a different color than dark brown. Yeah, so it's not really moved. It's kind of just staying where it's at, but you can see at least since July started, it's starting to move in the right direction. Part of this is the axis is just so flattened right now. So if I did like 153,000 and 152,000, that looks a little bit better. You get the idea. Late May until now, there is an addition of about 222 10 plus BTC wallets. That's a good sign. Ratio of on-chain transaction volume and profit loss is staying fairly flat at the moment. If I mark the 1.0 line, we're still seeing plenty of days where there are more lost transactions than profit transactions. That's a good sign. Let me just hide the price for a moment. So July 5th is where you saw a lot of profit taking after there was a very short rebound. But these kind of days where you're seeing below zero, that's what you want to see because it's a sign of capitulation and people getting rid of their coins at a deficit compared to the price that they got them at. Now, H consumed, I do have to warn, the dormant movement is starting to go away now. And the average age of coins sitting in wallets is climbing back up pretty substantially once again, going at that kind of same rate that we saw, post all-time high when the network got stagnant again. It's early though, right? Like we're still pretty low compared to this big drop-off that happened from the Mt. Gox trustee moving like billions of dollars of coins. So this is a bit of fool's gold here. This was just due to an event happening rather than like organic whale movement. You get the idea though. We don't want to see this gradual movement going up again. The sign of a bull run validation that we're in one is this line moving down organically. Nothing special on the network realized profit loss end, kind of similar to the ratio of on-chain transaction profit versus loss. Supply and exchange is pretty neutral also right now, staying low, which is good on the long term. Social volume, really not much. I mean, we looked at it on the screener level. There's like 5% less discussions than a week ago. Not much of a difference there. Social dominance, pretty neutral, sitting at just under a quarter of conversations is Bitcoin. We talked about weighted sentiment remaining low for what looks like an 8th straight week now. RSI is still below 50. Any asset that is below here is in a better than average spot, according to the RSI, one of the highly regarded technical indicators out there. I'll actually pull up a template in just a moment to compare a few top caps. And then finally, I want to mention that the overall amount of holders, which are obviously going to be massively comprised of really tiny wallets, because those are the easiest and most common types of wallets out there for obvious reasons. They've been going down for quite some time now. Since June 15th, about 4 weeks ago, it has declined. If I can leave that there, it's declined by a little over 606,000 net wallets. And that's, again, a good sign of capitulation. It's kind of reflecting what the weighted sentiment is showing, with a lot of people just getting impatient, growing tired of the lack of movement. And this is what you want to see. You want to see a lot of people just not wanting to hold crypto right now. As the polls show, people are very much expecting prices to go lower right now. Even if they're bullish long term, they're kind of like throwing their coins aside, hoping they can just buy them back from some other sucker who's holding it when it goes below 50K or whatever that price. And, you know, they may end up being the suckers for selling with that expectation. All right, as promised, let me look at the RSI comparison really quick. Top cap RSI comparison. So I love this chart. It looks very noisy, but if I zoom in here, I'll just look at the last week. We can see which assets are above or below that average value of RSI. So we have 3 coins that are just barely above average, one of which is Cardano, one is TON, and one is XRP. Every other one on this template, Bitcoin, Ethereum, BNB, Sol, Doge, Shiba, and Avalanche, they are under that 50.0 RSI line, indicating they're in a better than average spot according to the velocity of their prices. So good news there as well. Makes sense after we saw such a dip in the early part of July. There's still some ground to make up there. Okay, let's take a quick look at some of these social trends, and then we'll answer a few questions and potentially stop just a little bit early today. Okay, so this is related a ton. I've been seeing this the last couple days. The word dogs is trending in the given text because it's being used as a crypto token on the TON platform. Multiple listings with different prices and quantities of dogs. So it's an associated token related to TON that's now getting a lot of traction on exchanges. Of course, TON is widely regarded as one of the top performing assets of 2024. So anything that's attached to it, it kind of gets a mini blip of their own. It kind of reminds me of Solana, maybe back in late 2021, early 2022, when it was kind of the golden coin of crypto that everyone was excited about, and any new asset that was running on its blockchain would get its time in the sun. Pizza, I think, yeah, this obviously, anytime I see pizza, I know it's about that infamous transaction of that guy who paid hundreds of thousands of Bitcoin for a single pizza, which obviously would now be worth hundreds of billions of dollars. CPI report is still getting a little bit of traction. We talked about that huge spike that coincided with the top. The German government, you know, this was kind of a topic that a lot of people were attributing to the price dropping off in the first place. Trending due to the significant amount of Bitcoin being sold by the German government, they've been steadily reducing their BTC holdings with only a small amount left to sell. The sell-off has implications for Bitcoin. So it's kind of ongoing, you know. People are looking at Germany as a bearish potential entity that is looming over crypto and can push prices down further at any given time, kind of like China was for a while back in, I don't know, the 2018-19 range when their government was kind of meddling with crypto quite a bit. But I still don't think this is as big of a story as some are making it. And Germany, for however much crypto they do or did hold, I don't believe they have enough in their bags to single-handedly drop crypto markets and put them in unrecoverable territory. Paxos is also trending because the SEC ended its investigation into stablecoin issuer Paxos, declaring that the BUSD stablecoin is not a security. So a lot of these stories have been coming out about how they're not securities, and that continues to be a good story for crypto at large. And then we got Trump here that is still hanging on to the top 10 just barely. He's continuing to talk about his pro-crypto stance, obviously, to get in favor with crypto traders, and up to you if you decide whether he's authentic about it. We don't jump into political opinions here, even though I'm from the U.S. myself. I leave it to every individual watching to decide, who they want their next president to be, who's going to be most crypto favorable. But there is a lot of talk on social media where the crowd appears to seem more pro-Trump in terms of what is more pro-crypto. As far as trending tokens go, I won't spend too long on this. Bitcoin is the number one project, and that is in relation to the Trump discussion going on right now. There's a bearish argument here, which includes the Germany sell-offs, the negative comments from prominent figures such as Jamie Dimon, idea that hoarding Bitcoin, an artificially scarce asset, may not be beneficial for society in the long run, the ongoing selling pressure on Bitcoin despite potential positive factors such as Fed Reserve rate cuts and US inflation easing, and the perception that Bitcoin may not be able to sustain its current value. That's kind of generic bearish arguments right now. On the bullish side, people are talking about the limited supply. This is always a thing. Increasing adoption and acceptance. I think these are mostly just generic explanations that are constant narratives on the bearish and bullish end of things. But I think the reason it's trending more often than not over the past week is due to the Trump discussions and just the overall price volatility, where it dipped to 54K, then got back up to 58, and is continuing to cause traders to debate back and forth about which direction we're heading next. Toncoin still being talked about. A lot of that's related to dogs, Link, Ham, Near, BUSD, Render, which is still getting a lot of traction as one of the top AI projects that people regard. Stacks, Frax, and Maker. Maker especially is really climbing high at the moment. Okay, last thing I want to show before we answer a few questions is the leaderboard in terms of assets that are getting significant amounts of network activity, whether it's good or bad. Now, I just mentioned Render. It's seeing its #1 active address day over the past 3 months today. So if we go to the chart really briefly to confirm that, the nice thing about this activity matrix, I've never seen it wrong. I've never checked the charts and gone, wait, why did it say it's having its best day? It's not going to be a fluke. It really does provide a great way to find anomalies whenever you're looking for them for specific altcoins. So if we go to daily active addresses and I refresh, that worried me that I just jinxed myself. There we go. So we see the daily active address spike. We saw 2,473 active addresses yesterday, despite the average being only about 60% of that. So that would be a sign that it may have bottomed out and could have a climb coming up. Remember that the activity matrix is a great way to find price turnarounds, whatever direction it was going. If you suddenly see the network getting hot, that means that a 180 on that price direction is much more likely. Other leaderboard anomalies here. We see network growth. Project Galaxy is up there. Render once again with a lot of network growth. Whale transactions. Project Galaxy once again. True USD, interestingly. So there's been a lot of stablecoin transfers going on. ApeCoin here for some of the key stakeholder accumulation. Seller. Chainlink, which is very interesting. Social dominance, Seller, Compound. They're having their highest social dominance days of the past 3 months. As far as coins moving off of exchanges, which is why it's showing the positive here instead of negative. We have Nexo, Pax Gold, and Project Galaxy. Mean dollar invested age. Let's look at Chainlink for a minute. So key stakeholder accumulation and mean dollar invested age. We'll look right here. So let's take all this off, switch to link. Unlock that. Get rid of these lines. The link is $12.58. So key stakeholders that the model's looking at is right there. Oh yeah, 10K to 100K. It's apparently taking off. The percentage of the supply has surged. The absolute amount of coins just since June 24th here, it's gone up about 4 million coins amongst this tier, which is a 5.3% increase. Yeah, and the tier above it too. So the smart money is really aggressively accumulating Chainlink. That's something you guys may want to look into more yourself if you're interested in Link or altcoins in general. The other thing that it mentioned was its mean dollar invested age. So a lot of this accumulation apparently is from dormant wallets. Let's just add it to one of my neutral charts below here. Yeah, relatively minor little blip, but yeah, there is. If we look at this red line, there are some signs that older wallets are moving coins pretty aggressively once again. So yeah, I'd call that a good thing as well. All right, anything else here? Immutable X is seeing a huge age consumed spike. Let's look at that last. IMX, age consumed. Yeah, that's massive. This is a 22.59 billion coin age consumed spike, which is calculated by looking at the amount of coins being moved multiplied by the age of those coins that had been sitting in stagnant wallets. So this is the largest spike in age consumed age consumed since, go back a year. Yeah, in at least a year. Last time we saw one this big was August of 2022, and that was pretty close to a bottom. It ended up turning around in January 2023. I think it's a bit of a fluke because the FTX collapse happened here, so it's a bit misleading, and we don't have as much data as we'd like to reference what happens typically when we see huge spikes. But overall, these spikes do look pretty routine and in regular intervals. So I wouldn't be surprised if it's kind of an internal function that doesn't have as much significance as we would like it to. Okay, Balresh, maybe you can give me a couple asset requests. Thank you. You just sent them over to me via Discord. Nosana. I don't think this is an ERC20, but regardless, there'll still be a few things we can look at, like trading volume. Let's go to just the past 6 months here. So price has certainly fallen off significantly since its all-time high back on March 7th. Price is down about 64% ever since then. and volume has kind of followed suit. There aren't really any signs that Nosana is seeing a huge volume interest overall. That doesn't necessarily mean it can't turn around. It's currently the 283rd largest market cap asset. So don't beat yourself up if you've never heard of this coin, everybody else. But regardless, whoever requested it, you probably have a good reason to. So let's take a look at the social end of things. We are seeing a little bit of a social dominance spike, but it looks like those are pretty normal. It's within range. I mean, it's 0.12% of the discussions. So it doesn't, you know, it kind of reflects the market cap rank that it is, where it's a little obscure and doesn't get talked about very much. But social volume wise, I'm not seeing anything special here. It does seem to just be fluctuating with regular discussions, ranging anywhere between like 5 to 20 mentions per day. So it's not getting anything really special there. But in terms of weighted sentiment, it's also quite negative, but not extremely. Even when it has gotten negative sentiment, it's been kind of unpredictable. And then development activity is the only other thing I can, and RSI. So one sec. Development activity, it doesn't look like this asset has an extremely large productive team. I'm sure there's something going on there because these aren't zero numbers, but it's getting less than one notable GitHub submission per day, which I would always be a little bit cautious about, unless you know something about the team. Maybe you're on the team yourself and you're requesting it, but regardless, it doesn't look like Nosana is getting a lot of development at the moment, and it could just be because it's a very small project for the time being. Finally, RSI, it is a little bit below 50, which is a good sign. Makes sense because its price has fallen so much, but it's also not in like a really great buy range, like 25 or under. So, you know, there isn't a ton of information I can really pull here for Nosana because it's not an ERC20 and doesn't have the usual blockchain data that we can look at. But overall, I think that it looks pretty neutral. There's not much social volume or trading volume. RSI is favoring the bullish side just a tiny bit, but it isn't standing out to me in any real fashion. Thank you for the recommendation. Any other ones, Max? Okay, all good. I think we've done enough anyways. I wanted to get this stream finished maybe 10 to 15 minutes early, so right in that range. I want to thank everyone for watching. I think we will have Maxim back next week, but I can't confirm that just yet. There's been a lot of team travels for some company meetups as of late. So we'll have more updates for you soon. Stay tuned for more insights coming up today on our X and insights page on insights.santiment.net, Telegram, YouTube, and even our LinkedIn. We put our insights everywhere. So you won't be able to miss them even if you tried. And I want to wish everyone a wonderful, happy weekend wherever you are. Thanks for tuning in and continuing to support the channel as we grow. And your recommendations on what else we can cover and improve upon are always welcomed. So thank you very much. On behalf of Max and Maxim, who couldn't be here today, adios, guys.